Hi, I'm Adam Spencer. I'm EVP Corporate Development for Montage Gold. Happy to be back on here with Matt at Crux to talk about the Koné Gold Project. A lot has happened since we last spoke with Matt in February. We've now finally released the results of our PEA on the project, which we're very excited about. In a lot of ways, it did exceed our expectations, and I believe it really does demonstrate that the Koné Gold Project itself, is justifiably a standalone development that you would want to build in Côte d'Ivoire. Has a long mine life, has significant economies of scale, low cost structure, production that peaks at over 300,000 ounces a year. Lots of good things going for it, and we're excited to be here to talk about it more.
Brilliant. Good to have you back, Adam. How have you been keeping?
Keeping just fine. Things are starting to feel a little closer to normal back in Ontario. So no complaints.
Sweet. Okay. Well, appreciate it. We tried to catch up with Hugh last week, actually, but he was having connection issues in country. It was a bit like that,
Yeah, so. We'll get him on. We'll get him on next time.
Yeah, it'll be fine. It'll be fine. It'll be good to catch up with him because we had him on, crikey, over a year and a half ago. But yeah, big news. So the PEA is out, but let's just kind of reset. So step back a little bit, just for people starting to look at this story. Okay. You've got yourself a 3 million ounce resource that's inferred. Okay. You've been putting out drill results since we spoke in February. Some nice numbers and over big intervals as well, and you kind of then delivered this PEA into the marketplace. So you've been busy. Mm-hmm. Has the market appreciated it though?
Yeah, it's a good question. I think if you're measuring it on a short-term basis, I think I would say the market's still not fully appreciating what we've got going on here. But if you look at it on a long-term basis, there's still a lot of opportunity for us to get that recognition in the market. We're very well funded, and that's been, I think, one of our key assets since completing the IPO. Obviously, the gold market took a bit of a turn down, and obviously our stock, went down with it. But basically since early Q1 of this year, I find that the stock's rebounded quite well. As you said, we have put out a lot of drill results. That's from our infill program, which is shaping up very nicely. And, the stock does seem to be finally reacting to it. Obviously, it's not as high as we would like it to be. I think everyone would say that about their company. But, again, we're patient. We're executing. We're controlling the things that we can, and I think we're doing a good job at that.
Well, let's talk about some of the backers here, because I think it will possibly help people understand why you've got the confidence that you have with regards to the numbers. Because I think the main feedback in the market has been, wow, look at that CapEx on for a company of this size. That's going to be problematic. So let's start us with who are the backers, and maybe a little bit about who's the team and the relevant experience.
Yeah, sure. And those are key strengths for the company. And, we've set it up in this way, exactly for this reason, because, if you're approaching, building a project, you need to know that you have long-term supportive, deep-pocketed shareholders that have done it before. And so our primary backers would be Lucas Lundin, the Lundin Family Trusts. They have a long history of value creation in Africa. Clearly, the biggest one has been the Redback Mining story. And, the core members of our team are from Redback Mining, and they've worked with Lucas for, upwards of 20 years or more. And so there's a strong kind of team there, a familiarity with operating in Africa, obviously very deep pockets, very successful individuals. And so I think that, does de-risk the execution of the project for Montage, does de-risk the ability to finance the CapEx, which, as you point out, obviously it's not a small number, but certainly within kind of the Lundin sphere of influence, bigger projects have been built in the past with great success, and so that's one of the kind of key strengths that we have. We also have the Sandstorm Gold Royalties Group, which is where I came from. So I have a project finance background myself. Sandstorm has deployed hundreds of millions of dollars into projects over the last, call it 5 or 6 years, of which I was, a primary participant in those activities. So I have a lot of experience, approaching projects like this from the other side of the table. And, I can tell you that, biases aside, this is an excellent project that can support a significant finance package in the market. And so with that experience, coupled with the Lucas support, we also have Ross Beatty as a close relationship and a shareholder. We feel like we're in a good place.
Okay, so that's I think useful scene setting. And if we look at the asset itself, typical kind of greenstone type homogeneous deposits. I mean, you're finding huge widths, so 105 at 1.4, 71 meters at 1.5, 80 meters at 1.5. It seems like finding it's not the problem for you guys. Which is great in terms of like building out the size of this resource into the measured and indicated case. It's explaining to people how you get this funded. So, it's a big number. Why? And the question you're going to be asked a lot is, why aren't you starting smaller and building from there? Why have you gone so big so early?
Yeah, I mean, I think, we're dealing with Mother Nature here, right? And so you have to let the geology kind of guide you down a path when you're thinking about trying to turn a deposit into a mine. And so certainly, where we arrived at was as a result of that sort of process. The nature of the ore body itself has a lot of benefits. You mentioned some of the intervals, but really the true mineralized width of this deposit is 200 meters or wider in areas with horizontal mining widths exceeding 300 meters. So, very homogeneous, very consistent, very simple from a mining scenario, but it's large scale. So because the deposit itself has such significant scale, that naturally you're going to partner that with a mining and milling operation of significant scale too. And all that brings into the economics of significant cost economies, both on the mining side and the process side. And then you look at, if you look at the deposit and cross section, which you can certainly see on our website or presentation, the strip ratio is, probably one of the lowest that you'll find for an open pit project really globally. And that's a significant benefit. And, we have, relatively soft rock when you look at a grinding perspective. So we have a very straightforward crushing grinding circuit, everything essentially off the shelf. It's just bigger. And with that, scale, in addition to cost economies, you get significant production. Like we're looking at, during the first 9 years, about 250,000 ounces a year, a life of mine of around 15 years at 205. But, in the early years, the critical years with capital payback, we're essentially hitting 300,000 ounces of gold per year for the first 3 years, driving a payback of around 2.5 years for the project. So we think, it's worked out, significantly to our benefit by having the scale potential of the deposit.
Right. Okay. So around 2.5 years payback with that kind of, with 300,000 ounce number, it's 31% after tax IRR, all good. Who is going to fund this thing? Who's going to look at these numbers and go, that's perfectly reasonable for a $100 million company like you currently are to be, considering, even conceiving of?
Yeah, I think there's a whole host of groups that you could go to talk about this. There's obviously the commercial banks, there's the export development banks, there's the streaming group of companies that would take a look at this. There's private equity. There's a whole range of ways that you can kind of skin this cat with respect to the CapEx. And our primary objective will be to minimize the actual equity dilution to our shareholders, because that's, I think, when you're thinking about building a project and how you're going to maximize returns to your shareholders, it's how can you reduce the overall kind of net kind of equity that you have to raise, and issue stock for. And so because of the significance of the production, the cash flow in the earlier years, we're quite confident that this can support, quite easily high threes to, mid fours in terms of project finance. And, we've had initial discussions with groups kind of back of the envelope that agree with that capacity. So we think we're in a good spot. And, it's obviously very early. It hasn't even really been a month since we put this out. So we're just starting to have these conversations. So we have, let's say 6 months from now, we should be in a position to publish the feasibility study. We will have submitted the ESIA as part of the permitting process. And so that's when we'll be starting to get a lot more serious in discussions with project finance groups. But for now, it's more like, we've had discussions with all these groups over the last 2 years, We finally have some numbers to show them as a starting case. Let's, re-engage, see what they like, see what they don't like, and,
So,
continue the
so
conversations.
you said a couple of things that was interesting. Of course, it's way too early. PEA plus or minus 30%. Who knows?
Yeah.
But you've got a bunch of work to do. But are you skipping straight to feasibility? No PFS? Is that what I just heard?
Yeah, look, I should have mentioned that, and we often do. This study, although it is called a PEA, and we have to disclose it as a PEA, all of the aspects of it, the test work, the engineering, etc., has all been done to a PFS level. The only aspect that is to PEA level is the fact that the resource is 100% inferred at this stage. So if it wasn't that case, if we had an indicated resource, it would have been a pre-feasibility study. We've been executing since January a 55,000 meter infill and expansion program. Majority of it is infill. That's essentially complete. I think drills probably stopped turning or may have already stopped. And that will lead into the maiden indicated resource calculation, which would be kind of late July, early August, which will allow us to transition directly into a feasibility study. And the feasibility study work is actually already started.
Okay, that's really interesting. So that 55,000 meter drill program has completed in the sense of the drills have stopped turning. You're going to start feeding this information. You have got some results out, I guess, but when do we get the complete set of data?
Yeah, it's a good question. The frequency of assays coming back from the lab has, a bit of variability. We put out, I think, around 15,000 meters worth of infill results so far. So we've got, another, call it 40,000 meters to put out. And, that will come in, between now and, I would say probably end of July, by my estimation. And, if there are any delays in the assay results, we're going to let them all come in before we calculate that resource, because the whole approach here is to convert as much of that inferred resource to indicated as possible. So if there are any delays on assays, we'll just, wait for them to come in and make sure that we kind of completely assess the full data.
Okay, so you want all the data in that. So given that the PEA, you're telling us the PEA has been done to a PFS standard, things like the contingency, you've got a contingency in there of what, I think 65 million or something like that, isn't it? Does that get refined? Do you get to, or do you think that's fairly accurate? I mean, can you save money there?
Well, I mean, I guess by the nature of being a contingency, it's to, address inaccuracies in the estimation. And, obviously you go from a PEA level to a pre-fees to a fees, that tightens up a bit. And I think, given that we're going so quickly from, let's say a PFS level estimate to a feasibility level estimate, I think there's just the natural kind of tightening of that contingency from PFS standard to FS. I do think there is some opportunity to bring that down a bit. We're not kind of promoting that opportunity so much, because I mean it's 65 million on 490. So even if it gets cut in half, does it really change a lot? Not a lot, but obviously it's a nice opportunity to potentially have that CapEx figure come down.
Right. Okay. And with regards to, I get that drill program is finished, but you got 25 million bucks or so in the bank. When's the next drilling exploration program start?
Yeah, so I know that there's going to be a bit of downtime on site for the next, call it, month. The guys have been, pushing really hard. I think we had upwards of 7 or 8 rigs going for this program. So, they do need a break. But, that kind of completes, at least for the time being, all the drilling that we'd want to do on the resource area at Koné. And, then we'll be looking to kind of step off the resource area. We've started to kind of address or assess, I guess, other targets within the existing exploration license. There's 6 total targets, five targets in addition to Koné. We're currently drilling one called Petit Yao. We'll have some drill results coming out on that in the next, few weeks or months. But there's other targets within the license that we will eventually get back to drilling. And then beyond that, we have a number of applications to the north that are all within truckable distance. And we are pushing very hard to have those issued. And we're hoping that in the next, let's say month or so, we may have some additional ground to actually get into and explore for the first time. So if that happens, because we have such a strong treasury, we'll be able to get in there, and we've already got some money in the budget for exploring that ground, even though it's not actually, granted to us as a license yet. We're kind of gearing up and ready to do it.
Okay, you've talked about this as a district play, right? Mm-hmm. Does the fact that the Lundin family is involved in a meaningful way and the track record with Redback, that give us a clue as to how you're going to play this one? Because the questions we keep getting being sent in to us is, are they setting themselves up to be acquired, or are they going to bring this into production? Are they going to be doing more acquiring themselves?
Yeah, and my answer to that is, if you look at what Redback Mining did, I mean, obviously long before they got the takeout that they did, which is certainly one of the best in the mining industry, I think, that we've seen. They were builders and operators, right? And our view, our philosophy is that you need to be thinking about this as if you are going to advance it yourself, because that is probably your greatest opportunity to create value if you have the ability to actually execute on it. Seen lots of stories out there where you drill a resource, you put a for sale sign up, you're not advancing it any further, and you just drift sideways. And if you don't have the capabilities and experience in house to advance it, then you just kind of languish. I mean, sometimes it can work out, but I think more often than not, it doesn't. So we look at this as truly a new district in Cote d'Ivoire. We have the cornerstone asset that would be kind of center of gravity for satellite pit exploration and production operation within, call it a 75 kilometer radius from where we're at. And there's a ton of value that can be created there. You look at Koné on its own.
Well, explain that. Talk about why is the value created by doing a satellite pit?
Yeah, because you look at Koné, it's a large deposit, large scale mill, milling an average grade of around 0.65 life of mine, but with very low process costs. We're talking $7.20 per ton. And so you look at exploring within, say, a 75 kilometer radius here, and by our estimation, there's well over 100 kilometers of mineralized trends within that radius that could be trucked. And this is based on an assumption of, if you're pulling out material that's 2 grams per ton or better, you can truck it 75 kilometers relatively easily. But when you say you even find 200,000 ounces that's grading 2 grams, and you're going to feed that into a mill that's processing on average 0.65, the economics of putting in that material that's more than double the grade, actually more than triple, is disproportionate to the scale of the discovery. And, if you talk to Hugh about this, finding 150,000, 200,000 ounces, whatever the number is, it's an entirely different approach than when you're trying to find a cornerstone asset that justifies standalone development. So having the cornerstone asset at Koné, which, to our minds, the PEA demonstrates it should justifiably be developed, really de-risks the whole exploration strategy in the district. And, it's relatively low cost to get out there and explore and identify these targets and advance them. And, finding something that's 200,000 ounces at 2 grams, is a game changer. It adds, at $1,600 gold, 150 million plus or minus to the NPV of the project from just 200,000 ounces at 2 grams.
Okay.
So, if we can do that 2 or 3 times, maybe more, like you get the sense that it would be transformative.
Excellent. Okay. So, and again, just for people picturing this, is they should be thinking of you like what company? Who's done this before? Because you're employing slightly different strategies there, but are you breaking ground here? Maybe that's the wrong phrase to use in this sector, but are you the first people to do this? Or was this just the way things get done?
Yeah, I mean, I don't think we're the first people to do it. I mean, there's been a lot of companies that have established a district by first identifying a cornerstone asset. And the one that just pops into my head is what Endeavour's done with Houndé in Burkina Faso. They have the big Vindaloo deposit, which I think is 2 million ounces, gram and a half, something like that. But where they're really making their money is within kind of the radius around it, where they have some smaller satellite high grade pits, and it's been a tremendous success. And I know that asset fairly well because back in my prior life at Sandstorm, we bought a royalty on it, and it's one of the key performers in that portfolio. So I think it does demonstrate that, you get the scale benefits from your first major discovery, and then it frankly just lowers the bar for what is economic to bring into the mill after that.
Okay. Sounds like you're happy with the PEA. You think people should be happy with the PEA. Mm-hmm. No concerns there. There's no piece of it you think, gee, I wish this had been better.
Oh gosh, I mean, of course we wish it was better. Everybody wishes their project was better. Yeah, we'd love to. Yeah, I think anyone that says that they don't wish it was better is probably lying. But we're very happy with the results. We take a very conservative approach to how we model out these projects. We haven't even touched on that, but if you look at our resource model, we use $1,500 gold. I think industry standard right now is probably $1,750 or higher. We've seen some resources being based on $2,000 gold pit shells, which I think is very aggressive. And then the pit optimization to, you build your mine plan around that. We use $1,250 gold. We optimize based on that price, which again, industry standard right now is around $1,500 for in-pit optimization. So, these are kind of the details in the background that, they're not going to be a headline in your press release. But again, because we're approaching this, our headline for a while was discovered to build, and it's a bit cheesy, but the whole approach here is, we plan on living with this project for a long time. So we better be sure that, we've studied it, properly and conservatively. And that's, I think if you go into the details of the study, then I think you'll find that.
Okay. So what we've got to look forward to is a bunch of these assay results coming through, and in 6-7 months, delivery of the feasibility study.
Yeah. So in summary, I guess the news flow to look forward to, ongoing drill results from the infill program. Obviously, the culmination of that would be the maiden indicated resource, and I think that'll be a key milestone because, so often as projects advance from PEA stage to EFS and FS, your PEA is based on inferred resources, and the biggest, the first disappointment typically for a project is that the inferred doesn't convert right to a higher level, and we've seen that with some of our peers in West Africa recently. But I think if we're able to demonstrate the conversion that we're expecting, and he was saying he expects 90+% conversion from inferred to indicated, then that would be kind of a standout achievement, and I think would go a long way to give people more confidence and de-risk kind of the results of the PEA leading up to the FS. So that's we're saying probably late July, early August for that resource, and the FS tracking for completion by the end of the year. But look, if there's a delay for some reason, and it pushes into early 22, not a big deal. We'd rather study it properly and get the job done, the first time. And if that takes a bit more time, that's okay.
Brilliant. Adam, appreciate the update. You should come in more regularly. The story's starting to pick up.
Yeah, I appreciate that, Matt. And we'll get Hugh in for sure, maybe next time and do it more frequently.